Joining us now, Bernstein senior semis analyst Stacy Rasgon. Stacy, great to have you with us.
Good to be here.
I get that you may believe, and you probably do believe, that Nvidia is the way to go. It's the leader in the AI space and the picks and shovels long term. But just realistically, if rates, are above 4% on the 10-year yield, does that matter? Does that change your analysis of where the stock will go in 12 months if we know, for instance, that the 10-year yield will remain above 4% or if it's below 4%?
I mean, the 10-year, not that I'm an interest rate guy, but I mean,
Sure.
The 10-year yield's been there and certainly hasn't slowed anything down. I don't know the companies that are looking to invest in AI, at least right now, are necessarily thinking about the right discount rate to put on it. Maybe that comes later. But for now, I think the spending is happening.
The forecast given by Nvidia was a real reset, it seems, for the company and for investors and how they perceive Nvidia, particularly when after the China export controls came out, after we understood the limitations, Nvidia is still stuck to the forecast. Nothing is going to change, and that implies that there's so much business elsewhere that they weren't even accounting for when they gave the original $11 billion forecast. Is that the way we should think about it, that there are pockets of demand that they're not even accounting for right now? And how interest rate sensitive could that demand be?
So to be clear, there's already export controls in China that lets them not ship some of their products. So they've made new products that are legal to ship. There's been some chatter that those new products may at some point no longer be legal to ship. I don't think that's necessarily been instituted yet, but that's the chatter. And I mean, they've kind of talked about there's no real impact if that happens. And I think to your point, that is the reason. There's so much demand right now. If they need to pivot those wafers like somewhere else, they'll pivot those wafers somewhere else. I think the China point is interesting, though. It's not anything about right now. Longer term, I think that China TAM, you have to think about, is it going to be there or not? And frankly, I think that is a risk whether or not the export control thresholds are lowered or not, because they're never going to get raised. And while even if they can ship stuff into China now, over time, the gap between what is legal to ship in China and what is legal to ship elsewhere is going to get bigger and bigger and bigger. And what they're shipping to China is going to be less and less competitive. And so I do think over the longer term, you do have to think about that China TAM potentially being at risk. But I think the overall TAM is big enough where it's okay. And certainly right now, it's not a problem. There's tons of demand everywhere else.
Stacy, give us a gut check on Semicap and how you're thinking about that in light of how we're folding in the Dutch and trying to put up a united front, at least regarding the Chinese.
Yeah, you bet. So the Semicap guys, it's funny, with these export controls, the only ones that have really seen significant direct impact was Nvidia, although they were able to backstop it, and the Semicap guys. And with Semicap, it was primarily memory. There was a little bit more on the logic side, but there were already sanctions in place on logic shipments, so it was mostly memory. And so that's where we are. So the impact of that stuff has already been taken into account for the Semicap guys. Now, if there are more sanctions, now it looks like, again, ASML and some of the others are not going to be able to ship stuff for some more of the trailing node. That's potentially an impact, at least for again, I don't cover ASML. It's a colleague of mine, but it's 30% of their revenue or something like that. If you start to think about lagging edge starting to get impacted in China, that starts to, in my opinion, get out of the realm of strategic. Most of the current sanctions have been strategic to stop China from developing a local leading edge semiconductor ecosystem. You start to move into the lagging edge, it becomes a problem. But you got to think about this. Like, the next logical step would be what they call 28 nanometers, like the next step down in terms of process technology for logic. China right now has something like over 50% of the world's installed 28 nanometer capacity. If all of a sudden, and again, this isn't the case right now, but if all of a sudden you weren't able to ship anything at all, no spare parts, no anything, I mean, that causes massive disruption to the rest of the industry. I mean, you think you've seen semiconductor shortages now. Imagine a case where the 28 nanometer capacity in China all of a sudden becomes scrap metal. I don't know that that's a broad area that the governments want to go down, but certainly they are doing their best to try to constrain China's ability to sort of move down the technology curve as much as possible.
Stacy, always great to get your thoughts. Thank you. Stacy Rasgon.